Hi everyone. This session is pre-recorded to prevent technical problems, but I'm here with you and I'll be happy to answer your questions at the end. To keep everyone from talking at the same time, I've muted all your mics. I will answer your questions, like I said, only at the end of the presentation, so please keep them in mind or write them down somewhere else than the chat room. To ask your questions, you will have two options. First one, you can write them down in the chat room. You can identify the chat room by the speech bubble in the GoToMeeting app, just like this. And second option is to write the word question in the chat room, and then I will unmute your mic so you can speak. But be aware that this session is recorded. Also, I really want to clarify one last thing before we start. As a brokerage firm, we have no legal obligation to inform you on any of the changes we will see in this presentation. I'm an insurance broker, not a property manager nor a lawyer. We are presenting changes to the law, some of which have an impact on your insurance while others do not. The reason we decided to do this is to make sure that our clients are aware of their legal obligations. If you ask around you, you will see that no other insurance firm has done anything even close to this information session. My point is that I cannot take 10 minutes individually with each of you, each of my clients, to summarize even very quickly what we're about to see today. Unfortunately, I don't have time to do this with all of you. So if you have questions, I'm happy to do my best to answer them today, but again, I'm not a lawyer and I cannot comment on your specific situation. Okay? Good. So let's start this. Welcome everyone. Today we're talking about Bill 141, 16, and 41. Bill 41 was adopted about 3 weeks ago or so, and well, it's brand new, and you may not have heard of it as of yet. At the end, like I said, there will be a question period, and alright, so let's start. Alright, so first let me briefly introduce myself. My name is Chantal Chatran, and I've been working as an insurance broker for the past 10 years. About 4 years ago, I decided to specialize in co-ownership insurance, as much for the syndicates part as for the co-owners. Since last September, I've been doing a co-ownership management training at the university in the evening. The idea behind this training is to allow me to understand the operation of a condominium in detail so that I can properly advise my client, but I do not intend to become a property manager, so don't call me for that. Now, our company has been in business for over 50 years, although our name changed a little less than a year ago. For those of you who are insured with us for more than a year, you might remember that our name was Dubecoq-Pedichelli and then Dubecoq-Pedichelli-Créneau. We decided to change for Niche Assurance because we specialize in special insurance product, what we so-called niche product. We are doing less and less regular insurance, such as principal residence and car insurance. Our team has its own claims department with the claim adjuster, Madame Jessie Rivet, so your claims are always being taken care of internally, even though sometimes she will assign an external adjuster to get a second opinion. We also have a prevention department managed by Mr. Carl Pedichelli. This department's goal is to help you in the implementation of preventive measure in order to reduce your risk of claim as much as possible. In the past 10 years, we've experienced, we lost a lot of insurers. Some decided not to continue insuring syndicates policies, so we have less and less insurance company who agrees to do syndicates insurance. So when we have a syndicate who is proactive on prevention, it always helps to get better premiums and better conditions on their insurance policy. So Carl Pedichelli can help you out with this. So today's briefings feature certain changes brought by Bill 141, 16, and 41, but it doesn't include all of them. There were only too much, but only the ones we thought were the most important for our clients. If you want to get all the information and all the 200 to 300 pages of Bill 141, you can visit the National Assembly of Quebec website to get a copy of the project, the 141 project. Or else you can visit the RGCQ and Condo Legal website, for which I put the website's address on the slides. About Bill 141, here are the topics that we will discuss: civil liability of co-owners, description of the private portions, self-insurance fund, reasonable deductibles, mandatory evaluation every 5 years, assembly officers' liability, management of claims or works, distribution of damage, first line insurance, and the new wording for co-owners. Civil liability of co-owners. Article 1064.1 of the Civil Code of Quebec. Each co-owner shall take out third-person liability insurance, the minimum compulsory amount of which is determined by government regulation. So co-owners are now required to have civil liability insurance. This obligation was already in most of your declaration of co-ownership, but now it's a legal obligation. If you look at your declaration of co-ownership, you will see that often it says that co-owners must have at least $2 million liability insurance. So the minimum amount should be determined by December 13. I say should be because with everything that's happening right now with COVID-19, it's reasonable to believe that there will be delays. However, we believe that the minimum required will be set at $2 million, just as, like I said, most declaration of co-ownerships already required it. Alright, description of private portions. It's Article 1070 from the CCQ. It's a modification of the original 1070 article. So it says, in addition, the syndicate keeps at the disposal of the co-owners a description of the private portion that is sufficiently precise to allow any improvement made by co-owners to be identified. So, this section is extremely important, and if you are not already aware of this, you have very little time left to do the necessary. For condominium established as of June 13, 2018, it's already effective. For the others, most of you, you have until next June 13 to establish this description. It must be precise enough to allow the co-owners to easily identify the improvements made in their unit over time. Before, if you were buying a condo, it was difficult to determine what was an improvement or not. How do you know if the co-owners before you had changed the flooring, or if the co-owners before him had done it? The description of the private portion aims to make it easy to identify the improvements made in the units over the years. To determine the reference unit, the Board of Directors must do research work, which includes consulting, if possible, the original construction plans and specification, getting hold of photos taken on the delivery of the units, an advertising pamphlet used by the promoters, etc. The description must include a lot of details such as dimensions, quality of materials, pricing, and more. You will find on the RGCQ website a tool that can help you establish your description. It's very well done, and so I really invite you to take a look at it. However, I believe that you must be a member of the RGCQ to have access to this document. If you have several condos with the same characteristics, you can make a single description for all of them. You must make a description for each different condo model. Once the descriptions are established, you have the obligation to submit it in assembly to your co-owners so that they can vote for their approval. After that, you must send a written copy to each of your co-owners so that they can assess the value of the improvements in their personal units and contact their personal insurer to adjust their insurance coverage accordingly. The co-owners must insure on their personal contract only the added value between the description of the private portion and what's actually in their condo. For example, if the description specified that the floor covering of the bedroom was originally made of carpet at a value of, say, $5 per square foot, and that the co-owner find that it is now hardwood floor at $12 per square foot, the co-owner must only insure the difference between the two values, which is $7 per square foot. Now, to precisely determine the value between the original elements and the elements currently in the condo, do not call your broker. We are not appraisers. We cannot determine the value of the improvements to your condo for you. You should hire a professional appraiser to help you determine the value of your improvements. The syndicate must also contact an appraiser to have the reconstruction cost of the building assessed, considering the description of the reference unit, which you will give a copy to the appraiser, of course. Once you have the appraisal, be sure to send a copy to your broker so that we can ensure that your building is 100% covered in the event of a claim. If you don't do it, your building could be underinsured and you could be held personally responsible as an administrator or property manager. When a building is insufficiently insured, the insurer applies a proportional rule, also called the co-insurance clause, to all claims, and in the event of a total loss, the syndicate will be indemnified up to the insurance amount stipulated in its contract, not more. Now, for the self-insurance fund. Article 1071.1 is an addition to the Civil Code of Quebec, and it says the self-insurance fund is to be used to pay the deductibles provided for by the insurance taken out by the syndicate. It is also to be used to make reparation for injury caused to property in which the syndicate has an insurable interest. So, the self-insurance fund is really only to pay the deductibles or the damage that are under the deductible limits. The minimum contribution was to be determined by the government prior to next June, but again, with all that's happening, we don't expect to have it by then. In the meantime, we're told that you should start accumulating the highest deductible on the syndicate's insurance policy, regardless of the one for the earthquake and flood protection. Those two deductibles should be excluded in a future government regulation. You must accumulate at least 50% of your highest deductible the first year and the other half on the second year, so that you have 100% of it by June 13, 2022. Reasonable deductibles. Article 1073 says the syndicate has an insurable interest in the whole immovable, including the private portion. It shall take out insurance against ordinary risk, providing for a reasonable deductible and covering on the whole of the immovable, except improvements made by a co-owner to his portion, etc., etc. So, the syndicate must take out insurance against all these ordinary risk and containing a reasonable deductible. What's a reasonable deductible? We were supposed to get clarification by June 13 again this year, but not sure we'll get this. We believe that calculating a maximum deductible of $1,000 to $1,500 times the number of units in the building would be considered reasonable. So if you are 10 units and the syndicate has a deductible around $10,000 or $15,000, that would be good. Among the ordinary risk, sewer backup and water damage must be considered, and the syndicate should never remove those protections in order to save on insurance premium. The most common reasons for co-ownership claims are due to water damage. In fact, it's 95% of the claim, from which 50% are due to plumbing, such as broken pipe or leaking pipe. 33% are due to water infiltration, which includes any damage caused by water coming from the outside, such as rainwater that would infiltrate through the roof, or water infiltration through foundation in the spring when the snow melts. 6% are caused by a broken or leaking water heater, and this is one of the reasons why more and more insurers refuse to cover damage caused by water heaters over 10 or 12 years old. So make sure you have a replacement plan for your water heaters when they reach the end of their useful life. That's an easy way of having less risk of water damage. Mandatory evaluation. We're still in Article 1073. The amount insured must cover the reconstruction of the immovable in accordance with the standard, usage, and good practice applicable at that time. The amount must be evaluated at least every 5 years by a member of a professional order, designated by government regulation. So, an evaluation of the reconstruction cost of your building is now mandatory, and you must get a new one every 5 years. The reconstruction cost of a building must not be confused with the market value, municipal evaluation, or even the original construction cost. All of these are different and doesn't consider the same stuff at all. The reconstruction cost evaluation is for insurance purpose and consider cost for debris removal, professional fees, tax on material, labor, etc. The government must specify the professional orders that will be authorized to carry out these assessments. In the meantime, if you don't have an evaluation, or if it's more than 5 years old, we advise you to make a new one with a professional evaluator of your choice, stating that you want an evaluation for insurance purpose. Your insurers continue to accept your assessment, and even when the government specifies who can make these assessments, the one you have already done will be valid for the full duration of the 5 years. So we think you shouldn't wait to do one. Assembly officers' liability. So we're still in 1073. The syndicate shall also take out third-person liability insurance for itself and for the member of its board of directors and the manager, as well as for the president and the secretary of the general meeting of the co-owners and the other person responsible for seeing to its proper conduct. So, it's now mandatory for all syndicates to subscribe directors and officers insurance. Many insurers only cover members of the board of directors. However, when Bill 131 was adopted, we asked our insurers to amend their wording for this protection in order to cover all assembly officers, such as manager, president, secretary, etc. So, if you are insured with us, you are fully covered. We believe that no co-owner or any other person should agree to be a member of the board of directors if the syndicate has not subscribed this coverage. This protection makes it possible to cover the civil liability of directors and officers in the exercise of their function. Note, however, that this protection does not cover insurance fault. If the member of the board of directors decides, for example, not to insure the building at its full reconstruction value, or if they neglect to make the assessment necessary, they can be personally sued for this, and the insurer will refuse to defend them. Management of claims or work. Article 1074.1 is an addition to the Civil Code of Quebec, and it says that the syndicate shall with dispatch see that the damage caused to the insured property is repaired. This means that the syndicate is responsible for carrying or supervising the work, and that includes any work in the private portions. It also means that if the syndicate decides not to claim to its insurance, it will not be able to recover the sum paid for the repairs. He must therefore take these sums from his self-insurance fund or distribute the amount among all the co-owners by means of a special contribution. The exception to this rule is the insurance deductible. The syndicate may ask the co-owners to reimburse the damaged amount up to the deductible in his insurance contract. All this also applies when a co-owner is responsible for the damage. The syndicate cannot sue these co-owners for the repair except for the amount of the deductible. Note that if the damage is caused by the tenant of a unit, this rule doesn't apply. You can always sue a tenant for all the damage, not only the deductible. And that's why it's very important that your co-owners requires a civil liability insurance proof for their tenants, even when it's short-term rental. When it's short-term rental, your tenants won't be able to get an insurance proof with the condo unit address on it, and that's perfectly normal. But your tenants are normally automatically covered by their insurance contract for their main residence, just like you are when you are renting an hotel room for a weekend. So you must ask them for proof that they have such insurance contract for their primary residence. Distribution of damage. Article 1074.2 is again an addition to the Civil Code of Quebec and says the sum incurred by the syndicate to pay the deductibles and make reparation for the injury caused to property may not be recovered from the co-owners otherwise than by their contribution for our common expenses. When there's a damage, the sum incurred by the syndicate to pay the deductibles and make reparation may not be recovered from the co-owners otherwise than by their contribution for common expenses. This means that the total amount of damage must be distributed to all the co-owners according to their share and not only to the co-owners affected by the damage. So, for example, if a sewer backups affects 2 units in the basement, but the other 8 units are not affected, it's not only the 2 damaged units that will receive an invoice for the payment of deductible, but all 10 co-owners. The only time the syndicate can send the invoice to a single co-owner is when the damage is caused by his fault or by the fault of the good in his custody. Primary insurance. Article 1074.3 is also in addition to the Civil Code of Quebec and says that the insurance taken out by the syndicate constitute primary insurance. This means that a syndicate cannot ask a co-owner to claim to his insurance company if the syndicate is not filing a claim with his own. So the syndicate insurance is always primary and the co-owner's insurance is always in excess. This also applies when the co-owner is responsible for the damage. The syndicate must first claim from his insurers, and the co-owner's insurers will come in excess only if necessary. Now, the new wordings for co-owners. The Insurance Bureau of Canada established the minimum insurance coverage that insurer can offer their customers. The co-owner's insurance contract now stipulate conditions according to which the insufficient insurance or absence of insurance are covered. Insufficient insurance means that the amount of damage exceeds the insurance limit in the contract. For example, your syndicate takes out sewer backup insurance for $50,000. A sewer backup occurs and the damage amounts to $60,000. The $10,000, which exceeds the insurance coverage, represent an insufficiency. In this example, the syndicate would distribute the amount of the insufficiency among all of the co-owners as a common expense based on their share. The co-owner will then present this distribution to his personal insurer, and his insurer will reimburse 100% of it. Absence of insurance means that the cause of the damage is not covered. For example, there's a sewer backup and your syndicate hasn't subscribed that protection. This is an absence of insurance. In this example, the syndicate would distribute the total amount of the damage among all of the co-owners as a common expense. The co-owners will then present this distribution to his personal insurer, and his insurer will reimburse at least 90% of it. Some insurers might decide to cover the absence of insurance up to 100%, but they can't offer less than 90%. Now, for this distribution to be covered by the co-owner's insurance, there are 4 conditions that must be met. First one, the risk must be covered by the co-owner's contract. So, this means that if the co-owners didn't subscribe the protection, let's say the sewer backup protection, he cannot claim for the damage caused by a sewer backup. Second one, the distribution will be covered up to the limit of guarantee for this coverage on the co-owner's contract. This means that if there is, let's say you you subscribe for the sewer backup for a limit of $25,000, and your distribution is $30,000. You would be covered up to $25,000, not up to $30,000. Third one, the deductible of the co-owners is always deducted from the indemnity. And finally, the distribution of a deductible is not an absence nor insufficiency of insurance, so it's never covered by the co-owner's insurance contract. You cannot get the reimbursement for a deductible of the syndicate. It is therefore essential that the co-owners take out all possible insurance. A co-owner who's on the third floor of the building should still cover the sewer backup on his personal insurance policy, because if he doesn't and a damage occurs, he will not be covered by his insurer, and that means he will have to pay the distribution by himself. The same applies for the co-owners whose units are in the basement, and they should subscribe water infiltration by the roof, even though they will never get damage in their personal unit because of that risk. Okay, so we're done with Bill 131. Let's move on to Bill 16. The topics we will cover are maintenance log, allocation of expenses related to common areas for restricted use, contingency fund study, use of funds in the contingency fund, co-ownership registry, other changes, lowering of voting majorities. So maintenance log. Article 1070.2 is a modification to the Civil Code of Quebec, and it says that the Board of Directors cause a maintenance log to be established for the immovable, which describe in particular maintenance done and maintenance required. The principle of the maintenance log has been adopted in Bill 60, but the detail of its implementation haven't been adopted yet. We know that this maintenance log should contain a description of the work done and to be done, but we await more detail on this subject. In the meantime, we suggest that you start to write down in an electronic notebook all the works that are being done and the expected date of the next replacement of the roof, water heaters, etc. Allocation of expenses related to common areas for restricted use. The co-owners who have the exclusive use of common areas for restricted use now contribute alone to the expenses relating to the maintenance and ordinary repairs of those portions. Regarding major repairs or the replacement of these portions, the declaration of co-ownership may determine a different contribution. This change is already in effect since January 10, so no matter what your declaration of co-ownership says about the contribution of the co-owners to the expense relating to the maintenance and repairs of the common areas for restricted use, now the Civil Code of Quebec says that the co-owners are responsible alone for it. Contingency fund study. Bill 16 introduced the obligation for a syndicate to obtain a contingency fund study and to update it every 5 years. This provision is not yet in effect, so don't worry about it too much. Once this study has been carried out, the syndicate must fix the sum to be paid to the contingency fund according to the recommendations made in the study. The government must also determine the professional orders that will be authorized to carry out this study. In the meantime, you still have the obligation to contribute to this fund for at least 5% of your common expenses. Co-ownership registry. It is now mandatory that the syndicate keeps at the disposal of the co-owners a register containing the name and mailing address of each co-owners, each tenants, lenders, must also contain the minutes of the meeting of the co-owners and board of directors, all written resolution, bylaws of the immovable and amendment to them, the financial statement, a copy of the Declaration of Co-Ownership, copies of contract to which the syndicate is a party, like a snow removal contract, for example, copy of the cadastral plan, and, if available, the construction plans and specification, and the maintenance log. Eventually, the contingency fund study and the description of the private portion should also be in the co-ownership registry. Now for the other changes. Amendment to the bylaws of the immovable must appear in minutes or written resolution, otherwise they cannot be opposed to anyone. Representation of undivided co-owners. The co-owners of a fraction are deemed to represent the other co-owners of this same fraction if the latter are not present at the meeting, unless otherwise notified in writing. Therefore, if I jointly own a condo unit with my boyfriend and he doesn't show up at the annual general meeting, I will represent the totality of the voice of our units without needing his authorization. The board of directors now has 30 days to transmit a copy of all the minutes and written resolution to all the co-owners. It's also mandatory now to consult the assembly before making the decision on any special contribution to common expenses. Lowering of voting majorities. I've sent you a table that summarizes the majorities required for a certain decision. The majority that changes is the one required for a decision concerning act of acquisition or alienation of immovable works for the conversion, expansion, or improvement of the common portions, construction of buildings, amendment to the declaration of co-ownership, or the description of the fractions. It now needs 75% of the votes of co-owners present or represented. From now on, you don't need 75% of the vote of all co-owners. Only 75% of the votes of the co-owner present or represented. Okay, so now for Bill 41, it was adopted on March 17, and it mostly corrects the presumption of fault which had been removed from Article 1074.2 at the adoption of Bill 141 in June 2018. So it's no longer necessary to prove the fault of a co-owners to hold him responsible for damage. It's only necessary to demonstrate that he's responsible for the goods that caused the damage. For those who wonder if this correction is retroactive, the answer is no. Alright, so before finishing this presentation and moving on to the question period, I have a piece of advice to give you. Update your declaration of co-ownership. The provision of the Civil Code of Quebec always prevailed over the legal provision of your declaration of co-ownership, and if you do not update your declaration, you may make mistakes in the interpretation of certain clauses which may have changed over time. There are, however, two exceptions. Two clauses which never change, despite what the Civil Code of Quebec may stipulate, and these two exceptions apply only if your declaration of co-ownership was established prior to January 1st, 1994. First one, the unanimity of the co-owners is always required to make change to the destination of the building. Second one, the dimension of the private portion of each fraction can still be used as the only criteria of contribution to common expenses. All other provisions of the Civil Code of Quebec take precedence over the legal provision of your declaration of co-ownership. And remember that these two exceptions only apply if your declaration of co-ownership was established prior to January 1st, 1994. So, this completes the presentation. I hope you enjoyed the session and found the information helpful and relevant. If you have questions, it's time to ask them. I will open the chat room so you can write your question in it. Just remember that you have two options to ask your question. First one, write them down in the chat room. And second option is to write the word question in the chat room, and then I will unmute your mic so you can speak. Remember, this session is recorded. Thank you, everyone.